Hi, this is Dan Collins from the Dan Collins Report and Traders Exclusive, and today I want to talk a little bit about managed futures again. Recently, managed futures got a little bit of a black eye by a Bloomberg story that criticized the space because of the high fees for retail managed futures funds. The point they made is true that a lot of those retail funds have high fees, but it kind of tarred the whole industry. And when you were talking about high fees, you're really talking about kind of the dealer distribution network that that applies to more than certain managed futures funds, but all retail products. But managed futures, of course, are traded by CTAs, and the fund structure usually 2 and 20, but actually a little bit less. A lot of managers put 220 as kind of a sticker price, but often don't get the fees. There are a lot of managed futures programs that charge no management fees. Those, of course, are the institutional products that you can get if you're a high net worth investor. And many people don't invest in them or feel they can't because of high minimums. Often, many of the large institutional programs that Witten has minimums of 5, 10 million, a million. But there are thousands of commodity trading advisors out there, and many of them do very well. And you can access many managers at fees as low as $100,000, even $50,000. And with notional funding, you can even access them for less. So if you're in that pocket where you have $25,000 to $100,000 to invest, you do not have to go to a retail fund. The other advantage to going directly to a CTA through managed accounts is that your money is with your broker. It's not in a fund. It's safe in your broker, and you have daily transparency and liquidity. That's the greatest part about managed futures. And while some people say, you need $1 million to invest in it, that's not true. There are many solid managers out there with low investments, notional funding. You can take it down lower. I don't recommend that if it's an aggressive program, but if it's a strategy that's producing solid returns and targeting 10 to 20% with a ME ratio of 10 to 15, that's it's certainly okay to notionally fund that and add leverage up to that. As I said, you have daily liquidity. The important part is to talk to who's representing them. Make sure that their interests are aligned with yours. It's better if you have a third-party marketer who's earning a portion of the manager's fees than someone who's tacking on fees somewhere, or someone who's making money through the brokerage, because that way they may push managers that are a little higher frequency because they're making money by the frequency of trading rather than by the performance of the managers. I always tell people the most important thing is to have your interests aligned and to do your own research and your own due diligence. Bernie Madoff happened because the largest institutions were invested in them, and people didn't do it. They said, oh, these guys are invested in them, they must be okay. So I stress the importance to do your own due diligence or have someone you trust. Just don't trust the fact that large institutions seem to be doing business with a certain person and they're doing well. Managed futures is a critically important investment to have in your portfolio. You saw what happened in 2008. Some people think that there's another shoe to drop in the financial crisis, and it's important to have access to alternative return drivers. So if possible, look to go directly to a CTA. There are managers with low minimums that are affordable. Look at all the databases. They have a great deal of information on all these managers. And you talk to the managers, have them explain their program to you. That's particularly true in the option space, where a lot of the options traders have lower minimums that you can access for $50,000. And many of those option strategies are now more diverse and pure premium collectors. So once again, look for managed futures, watch where the fees are coming from. If it's possible, go directly to the managers through a managed account instead of a fund. This has been Dan Collins for the Dan Collins Report. Have a great day.